wanted to chat with folks a little bit more about something that I've talked about in the past, which are health savings accounts. But I want to talk to it specifically from the perspective of a retiree and thinking about Social Security and Medicare. So, I know it's another thing to learn, but there is something called a health savings account. And this health savings account typically works with your employer, employer health care options, or if you're self-employed, it can work with the marketplace or your however you're getting your providing your health insurance individually. So what it is it's a high deductible plan that you take a high deductible plan and you marry it with a financial instrument, which is called a health savings account. And what you're ultimately doing is you're putting your money, rather than sinking all your money in premiums and your company's money in premiums, you're basically putting it into an account that works very much like an IRA. You can actually invest the funds, you can not invest them, but they grow with you and they never expire. They're with you for your entire life, right? So as you're approaching Social Security, as you're approaching getting on Social Security and going on Medicare, it's a very important concept to sort of understand, because you do get, before you retire or before you go on Medicare, 12 months before you go on Medicare, you can do a one-time transfer from your IRA to your health savings account, right? And this will allow you, depending on whether you're an individual or a family. If you're an individual, it's this year it's probably going to be roughly close to somewhere in the neighborhood of $4,300 to $4,500 plus a $1,000 catch-up. If you're part of a family, it's going to be double that, and plus a $1,000 catch-up for you and your spouse. So, you could be putting away a decent amount of money in this health savings account. If you already have one, you probably have some money put away anyway, and that money is going to grow with, potentially, if you use the market, it can grow with the market, right? And so you basically have a chunk of money that's going to grow, and ultimately you can use it for things like long-term care. You can actually use it to make your Medicare premium payments, which is what I want to talk to you a little bit mostly about today. We'll talk about long-term care later, but it's a very good tool for retirement, and I'm going to tell you why. When you have, and let's say I am married, and let's say I have put away $30,000 in my health savings account, right? So, and let's say during the course of the end of my bread-winning years, I was, I was paying a roughly 32% in taxes, right? You could be less, you could be 25% taxes, but we're going to use 32 because, I think that number is someone who's making, good income, but not, is not necessarily, a super wealthy person, right? So 32% is being paid. So in order for me to make that $185 payment every month, which is what I have to pay for my Medicare Part B premiums, I would have had to earn roughly about $270 to $275 to make that payment of $185, right? Because I pay taxes, right? Now, some people argue it came out of my Social Security, but regardless, it's coming out of your savings or your Social Security. And if it's coming out of your Social Security, it's money that you couldn't use for your retirement. So let's just assume that you're pulling it out of that is a form of savings, and as a byproduct of that, there's a tax implication to it. So when I have a health savings account, so I had to earn roughly $285 to have a savings amount of $185 in my savings account. And so what a health savings account does for you is it says, okay, well, when you put that money in, first of all, it's tax-free. You get you actually are not paying taxes on it. So if you, when you do When you do the transfer, however, you don't get the tax advantage. But if you did have an HSA, you do. Now, when I spend that money, I spend it tax free. So when I pay my if I have money in a health savings account and I'm paying my premium for Medicare from that, which there's some rules around. I can no longer put money in once I go on Medicare or 12 months before. Once I go on Medicare, I can't do a transfer 12 months before Medicare. But the bottom line is I'm paying those expenses tax free, right? So if I have other income, if I have on top of my Social Security, it's not gonna affect my taxable income, and it will actually reduce my taxes for that year because now I'm spending money that I don't have to pay taxes on, right? And so I think it's very important for you to at least think about, if you are pre-retirement and you are going through your annual enrollment period, to find out from your company whether or not there is a health savings account option, because having some money there is going to help you in your retirement. It is going to be tax free for you to put money into it. It's going to be tax free for you to take money out of it for qualified expenses. And so I think it should be part of any sort of fixed income retirement plan. And I hope you take a look at it.